potentials for GBP. They're talking about the potential to use negative interest rates, how they need to do more economic stimulus, how downside risks are still interest rates, how they need to do more economic. Holy. Finally, man. Yes, I agree with you guys. Finally. Before anyone asked, time change in the US didn't affect the UK. Anyways, how's everybody doing this morning, afternoon, evening? It is currently 3:30 a.m. Eastern, Tuesday morning, coming into pre-London hours with London open in another 30 minutes. We are going to be doing some intraday and overall market analysis for trade ideas on gold, GJ, GBP USD, Euro USD, USD CAD, and US 30, while also taking into consideration any economic events we have overnight, main fundamental points to focus on, investor behavior, and then we'll start jumping in, dissecting market structure, price action, buyers and seller strength, and everything else that we usually focus on during these capital hungry webinars. I apologize for the delay. It wasn't anything with me. I have no issues doing a Zoom, doing a Zoom session with my private chat. I can start that like any second, but it's this XSplit broadcaster that I have to use to connect to YouTube. You know what I mean? So this XSplit broadcaster gives me a lot of issues sometimes connecting to YouTube, where it freezes, it shuts down, and then it sort of just ruins the stream from that perspective. For all the people viewing on YouTube. So I just had issues with that, but it seems to be resolved now. Yes. All right, before we jump into the meat and potatoes of the stream and doing the analysis across main pairs, looking at news headlines, mapping out trade ideas, here are your stream reminders on your screen right there for all the YouTube audience. Yeah, I gotta use a new streaming service. I'm gonna check out Streamlabs, and what's that one? OBS? Yeah, you guys give me those suggestions in the chat of other broadcasters to use, and I'm gonna note that down and set them up and try them this week. Because XSplit is trash. I only use XSplit because Raja said it was so good, but like Raja's like, I don't know, like I just guess it's easy for him to just connect it. But yeah, your stream reminders are on the screen. Feel free to ask questions about technicals and fundamentals regarding the overall markets. Do not ask for direct signals. Any questions about the Capital Hungry private service, just go to capitalhungry.com or message me on Telegram. For news, analysis, and stream reminders, make sure you follow the Capital Hungry News Twitter. Link right there. The Telegram contact is there. The free Telegram analysis channel is there. And obviously this YouTube itself. You also have your mental reminders on the screen. Our job as traders, Theta TV, our job as traders is also to make sure we manage our emotions just as much as we do analysis, manage our risk, and enter trades as well. So make sure you trade from a comfortable environment. You are emotionally neutral. You didn't just get in a fight with your wife or girlfriend and you're raging right now and looking to jump in a GJ trade. You know what I mean? Follow your trading plan. Follow your risk management plan. Focus on your long-term vision rather than your short-term satisfactory desires. And keep emotions out while you're trading, or do the best, or to the best of your ability, and avoid crashing your account. What's up with Raja and I hanging out recently? That's because Raja's in freedom mode. His family's in a different country right now. Yeah, there's no rush. Okay, so we've already had the UK average earnings pass the claimant count change, which was some fairly neutral data just about half an hour ago regarding the job change data here in the UK. It was actually improved data. So we can see with the unemployment rate, it has actually gone down 0.2%, which is an improvement. And that data came out about 30 minutes ago. And GJ is holding above 0.500 for now as well. We're going to do our GJ analysis, but I just wanted to quickly review this economic data that took place overnight. Was the UK unemployment rate, which is actually an increase. There is less unemployed people in the UK, which is a good sign. And other than that, we don't have too much else going on overnight for economic data besides at New York, 10 a.m. Eastern, new home sales, which can impact the US dollar, US equities, and of course have a lingering impact on gold as well. But other than that, we haven't had too much any economic data overnight. We've had this jobs change, which was pretty positive, and GJ is holding above 150.500. Higher time frame key level for now. We can see our key level alert got sent to the chat here for the private chat at 3 a.m. We're still holding that area for now, even with the price grab that happened at 3 a.m. So we're going to watch that accordingly. But just wanted to quickly review what economic data we got going on through the night. Just wanted to check that unemployment rate figures. It is improved. And that we will keep note of that improved unemployment figure in the UK when we go to our GJ and GU analysis. All right, we still have actual about 23 minutes until London open itself, and we're going to be watching the markets for a couple of hours so we can map out some potential trade ideas. The claimant count, that is the increase in job change, no? All right, let's start off here on gold. So on gold, we were watching the shift out of this minor bearish market structure. We were watching on the intraday time frame. So for about 2 weeks, we had sellers in control, and you can zoom in more here. And remember how I was telling you guys we had this bearish market structure being respected, this significant price point, which is 1700s. I'll move this down. is the first sign London Open was 37 minutes ago? No, that is not with the time change. London Open is in 21 minutes 38 seconds with a time change. It'll be going back to normal March 28th. Somebody in the YouTube chat actually showed me this website, tradinghours.com/countdown. Very nice, very simple, very sleek. I like it. I actually use it now in case I get confused with the time changes. 21 minutes though, tell that. Another 20-30 minutes, tell that. But anyways, let's dissect gold here and what we were taking advantage of and how we started to anticipate buys from 1680, 1700 and why. So for an extended period of time, we had sellers in control, and I'm just going to signify that for about 2 weeks with bearish market structure, and I'm using this red trend line to signify sellers were in control for this period, right? There are many points where you can get potential support formed and buyers entering the market, but unless you shift out of the bearish market structure, then you're not showing any signs of further buy orders entering the market. So this was a critical area in the sense that it's around 1680 higher time frame key level and near 1700 flat. And at the same time, you can see from this point at this macro low, as we had sellers exit the market and buyers jump in, we had this impulsive move breaking above the previous low and these previous lower highs. Right? From this impulsive move, which is about a 700-600 pip move to the upside, we have this 50% correction to create a higher low at 1700 and fail to break bullish market structure, with buyers entering the market to at least revisit a new intraday high here at 1750s. Okay, so the market structure on gold now is showing me more buyers momentum as we are entering a consolidation at this area. We still haven't shifted out of market structure yet. That is what I really want to keep an eye on, is that we're still having this bullish market structure respected. And until we, and very similar to like here, until we break structure, this order block and consolidation zone generating here to me is assumed to be buy side liquidity unless we break the bullish market structure in previous candle body lows, right? So when you line that up with our key levels, and also another thing I want to note is this bearish market structure that we're coming towards. Yeah, don't worry about GJ. It's not even London Open. It's just grabbing liquidity. We'll look at that after, you know? And another thing I want to focus on is this bearish market structure here itself, right? You can see the amount of aggressive plays that we've had to this area before, where if we have continued bulls in the market and we can break above previous significant price points, there's a very, very nice range for us to play, right? So I am really looking and interested in this current price point area, because we're coming to this squeeze here of bearish market structure, and we're still respecting bullish market structure, but we're entering an intraday consolidation phase. Now, a consolidation phase does not mean sells or resistance. A lot of people can get confused and start to see this as a technical resistance and start looking for sells. An example of this is something like this. You know how many people here, when they start seeing this exhaustion mix of bullish and bearish candles, they start thinking gold is a sell? But gold would not have been a sell in this situation unless it came below 1721 and broke bullish market structure, right? We would need to see that type of play in a break below the order block, in a break of market structure, to show us more sellers pressure. So you can see you had this consolidation phase, and then after the consolidation phase ended with the Fed interest rate, we at least went to print a new high. The same type of situation here. With gold's current price point and positioning, I can't say gold is a sell unless we were to come below 1727 or mainly 1721. This is just a consolidation zone, just as anything else behaves, where as soon as we break the highs of the consolidation, we're going to have another impulsive move to create a new high in this structure we're starting to see form. Understand? So the primary trade ideas I'm looking for as an intraday trader and scalper is, the first thing I'm going to do is identify that over the last almost 20 hours, price action has been very sporadic in the sense it's just ranging up and down. We haven't had any clean breaks of previous lows here. We haven't had any revisits or clean breaks of previous highs here. Obviously, we have just been consolidating with investors playing in this pretty much about 80 pip range up and down since the start of the week, after having that price grab at 1721 from last week and failing to break this area here. Okay, so now you guys can be like, oh, Jeeve, but look, but we're having a bearish candle, we're rejecting your key level, gold has to be a sell. Well, look how many times you've seen that happen before here, where if you don't break those candle body lows in that consolidation zone to the previous intraday lows, instead you're going to get an impulsive buy move to the upside. Even this aggressive correction after the Fed interest rate, look at it. Dissect the correction, okay? You have a new impulsive high created, just like something similar to here, and profit taking happened. This profit taking creates a very aggressive pullback. What's the difference here? You had a new impulsive high created, profit taking, and a pullback that failed to revisit this previous low and creates a third higher low for potential buyers to re-enter the market for us to visit these highs. Right? So the first thing I'm going to identify is I do not want to scalp this range. I do not want to intraday trade this range. I do not want to stress and fight this range when gold is playing in this favor. Right? I would only be looking for safe gold sells by noticing more sellers pressure and seller order flow entering the market and buyers exiting positions if we get this sequence of events. We never test these highs. We don't break above this consolidation order block. We break to the downside and we break this previous low. Then that will show me shifting out of this bullish market structure. Sellers orders entering the market, breaking this previous low. Then below 1721, I can safely take sells down, where even then from an intraday trade, I'd be looking to target the range down to 1700. That is the only way I would personally take sells. I would need that list of confirms to be checked off. I would need to check off each box. Did we test the highs? No. Did we break below 1727 in the order block? Yes. Did we break below bullish structure? Yes. Understand? Without those confirms, I cannot sell gold. I'm still in a buyer's bias like I have been since 1680, 1700, 1721. It's just creating its market waves, right? And with that being said, if we do break above 1739, even though we are getting a bit of struggle here over the New York session, if we can still clear above 1739, I can still see some potential buys if we can come above 1739 and safer above 1747. When we're coming to the lower time frame, we're going to see this indecision at play, but we're also seeing that we have not broken back below our 1733 medium-term zone either. So on the 1 minute, I will be watching if we can come back above 1739, more directly actually 1740.5. If we can clear above these 1 minute highs, there's an easy 80 pip range just to 1747 at least. Where this intraday trade, 60-70 pips, it's still a favorable buy trade if we break above 1740. All right. The market structure, and you have to look at how gold has behaved anytime a macro or impulsive low has been created, right? You can see this common theme where an impulsive low is created, sellers exit positions, and you get a pretty aggressive bounce. This one happened to revisit the previous low, but over a period of weeks, very aggressive bounce. This is like 1,000 pips. Impulsive low created, extremely aggressive bounce. Impulsive low created, even if we go back to the 1800s, this is a great run. So it would be 1,000 pip run from these lows we called. What we have to be mindful of is like similar in this stage here, as we shifted out of the bearish market structure here late November, and I've explained this so many times, but it's always good for reference. We have to ensure that this bullish market structure we are observing stays intact. And this is what I want people to get fooled by. Breakout to the upside. Consolidation, breakout to the upside. See how you can have these consolidations or potential resistance, quote unquote, technical resistance, but unless it breaks the market structure, you still have buyers enter the market and it's a buyer side liquidity order block and you have a breakout to the upside. This is why I don't want anybody selling gold right now without the proper confirms. You know? So yes, we might be in a current consolidation phase here. Not even that big. Yes, we might be in a current consolidation phase here. And this might start to look like a resistance, but we can't validate a break below previous lows or a shift in that bullish market structure yet. And especially when we're looking at the higher time frames, when you go to like the monthly, you have to understand where we're starting to retest. Very strong liquidity zone to the left from previous historical highs. This is where we're starting to dig into, and this candle is, which is closing in 8 days, this monthly candle is already create a pretty significant lower wick and can potentially close bullish if we continue up this week. You know, and then end up going back in this range, playing in a higher time frame order block similar to the left here after the 2008 financial crash. You know? So I'm only selling gold if it comes below 1721. If it just bounces between 1739 and 1728 and continues to range, I will not be touching gold. And I'm also looking for buys above this medium-term zone at 1740 or safe buys above 1747. I'm going to see what London volume brings in and if this is just a liquidity grab, and then if we can continue back. All right. Yeah, no rush. Don't worry about it, everybody. We still have 9 minutes till London Open. It's not like we execute anything right at London Open anyways. We like to do our analysis first. But does that make sense? The concepts between the buyers and sellers' strength on gold, how you had sellers in control for an extended period of time, the profit taking that happened by the sellers in this area, when you finally start to shift out of that bearish market structure. And we can't start looking for safe sells in this area until we break below the previous low. It's a similar type of resistance or consolidation like this. We could very well come to like 1730 and then just range and continue right back up. Don't confuse consolidations with like a technical resistance to start selling or a support all the time. For example, when you're in sell structure, a lot of traders who trade just purely technicals and may not be as advanced with structure or may not be as advanced with understanding the fundamentals, every single dip they look to start buying it because you see a support being formed. But unless you get a shift in that market structure we're watching, there's no real support until down here. This is the only real support for buyers. All this was just reactions, sellers exiting positions and profit taking by sellers. You can't validate a real support by buyers until you finally shifted out of the bear structure and broke that previous lower high point. Right? So it's the same type of idea when you're looking at this exhaustion here. Yes, we're having this exhaustion. Yes, we're having this consolidation, but it still hasn't broken structure. To me, this is looking like a bit of profit taking by buyers, a bit of indecision, as we still have a lot of Fed speakers throughout the week, which did cause a lot of indecision with the US dollar last week too, if you guys remember. Remember, last week with all of the Federal Reserve interest rate stuff, and before that, most of our US dollar pairs did this. If you look at GBPUSD, if you looked at gold, Euro USD, or USD CAD, they primarily ranged. Then the Fed interest rate caused the up-down spike move, and now we've pretty much been ranging again since, as we have a lot of Federal Reserve speakers this week as well. You know? Yeah, so safe buys above 1740.5, safe buys above 1747, would only be looking for sells below 1721. GJ, 4-hour time frame chart here. First thing we're going to simply do and scan on the naked chart is look at the market structure. Bullish, right? We are having continuous transactions behind the scenes of buyers extending investments and trades into new highs, taking profit, having pullback phases happen, and sellers jump in the market to relieve their order flow out and allow them to cash out, having price get pushed down to better demand areas every time a high is created, and then continuing right back with the trend. Post November 2020, we really had any. Could you please explain the safe buy above 1740.5? Yeah, no problem. I already did, but it would be that if you look on the hourly here, the only bit of price sensitivity that we've had above 70.45 is over here. Anytime we've broken above anytime we've broken above 1739, you can see even if it's fairly quick, you get these upside moves to fill the range, which is a 60 to 80 pip range, right? And you can see the amount of rejections we've had here before, where once you finally break above 1739 with clean bullish price action, you do get nice confirms to run up the next range. But I don't see just breaking above 1739 as enough due to this recent price action over the last few hours, where we've created more of a technical fresh resistance in this area just around 740.5. So I would need both the confirms of a bullish candle and coming above 1739, and then on the 1 minute clearing above these highs, where you can see we've had very aggressive downside moves from. Once we clear above this area and we still maintain bullish market structure, that is an easy impulsive move to the upside, where even revisiting this high is 30 pips. Understand? So I would need more than just breaking above 1739 due to the real-time reactions we've seen and rejections just like 10 pips above the key level. It's similar to like when GJ was creating that support yesterday, like 5 pips below. You guys remember like GJ was creating that support at like 4 or 5, not at like not exactly at like 500, right? It was a similar idea to that. GJ is going to be a fucking sick buy tonight, it looks like. But anyways, so that's why 1740.5. I need to come above our higher time frame key level and above these rejection points, and then we'll see easily safe buys when we break above that area. More buyers momentum. I prefer the 1 minute time frame because it allows me to see reactions between buyers and sellers at significant price points. right on the dot. I can see exactly how we react in real time up to the minute at a higher time frame key level, at a retest of a bullish market structure or bearish market structure, at an area of interest that we have predetermined, like psychological price levels. The 1 minute is the time frame where you can observe the action of price the fastest, because you have economic data every 60 seconds of candles coming in. Okay, so let's go back and start from GJ again, okay? GJ, higher time frames, bullish, as markets have been fundamentally optimistic, which means higher time frame, the dollar has been bearish still, the Japanese yen is bearish, the volatility index is bearish, global stock markets, even though they're having a bit of relief from their highs, have been bullish. This market optimism means investor confidence is a lot higher, so their risk threshold changes when markets are optimistic, right? Meaning they're pooling more money and liquidity into the stock markets, riding that wave with the support of the central banks, rather than putting money into safe haven currencies or putting money or staying on the sidelines. You know what I mean? So we're seeing more liquidity pool out of our safe haven currencies like the Japanese yen or the US dollar on the higher time frame, as it's still been extremely bearish. It's just had a bit of an upside push due to the Feds, and we're seeing it come out of those areas and go into our risk currencies and into the stock markets. And our risk currencies are obviously the British pound, euro, Australian dollar, New Zealand dollar, Canadian dollar. Those are the main risk currencies, or the basket of risk currencies that we look at. So all we have had on GJ is two things: either highs printed, 50% correction or price to a demand area and continuation up, or highs printed, consolidation zone that doesn't break market structure and generates liquidity, and a breakout to the upside, retest, continuation in that fashion. You have had nothing else with GJ technically over the last 8 months since the COVID pandemic got priced in, and since the Bank of England started providing that financial support for the UK economy and the UK people. And late 2020, Christmas, what do we have? Brexit optimism too coming into 2021, right? So we've only had those things happen on GJ, where we either get impulsive highs created with pullback phases that either go to retest a previous high, something similar to this: impulsive high, pullback to retest the previous high, continuation up. Impulsive high, pullback to retest the previous high. You guys get what I'm saying? Impulsive high, pullback, impulsive high, consolidation, impulsive high, consolidation, breakout, high, pullback, breakout. You guys get the point. You guys are getting the gist. So when you understand that fundamentally there is no real world reason for investors or buyers of GBP against the yen to have a reversal on this pair. If you have been buying or investing in GJ since 8 months ago, why would you want this to end? Ask yourself that logically. What is the reason for a reversal? What would be the reason for that? Why would they start exiting their buy positions that they might be riding for 8 months or continuing to scale in and start entering massive sells? What is the reason for that? Profit taking won't cause a reversal. I'm talking what would cause, when I say reversal, I mean reversal of this trend. I mean like changing and shifting this structure. You understand? Profit taking causes pullbacks. Profit taking causes pullbacks and retests of structure. A reversal is a complete change of trend. Have we had any fundamental market fear that could lead to a reversal on like GJ or GU or Euro USD yet? We had the initial pandemic, and that fear get priced in and digested and set up positions for investors to ride for the last 8 months, as we had GJ go to macro lows, right? As we had GU go to macro lows, EU dropped to macro lows, and we've been in bullish structure since. Ever since that initial fear from the pandemic, we have had no other fundamental catalysts that are equally as strong to shake investors' confidence and cause a reversal. We would need another new strain of COVID that's causing a zombie infection. we would need a complete reversal and backtracking of Brexit. We would need a complete global lockdown again. And we would need complete fuckery with the vaccines. If the vaccines cause more deaths than COVID, all right, that's going to change a lot. You get what I'm saying? Right now is London open candle. Don't execute on anything yet. This is actually very juicy because this candle doesn't have much of an upper wick yet. But I want to see how it reacts to around 0.500 here. All right, but it's just London open. Don't jump in right away. Let's watch it accordingly because we're still in an order block here on the intraday. But 0.500 is a very strong higher time frame support, and 0.500 where we are creating this support here is also the previous high point. Here, this was the previous high where we broke above that high and now we're potentially retesting it. If we can respect this area, there's a lot of room for us to continue back to the upside and fill this range. All right. Now, alongside our key levels and everything else, I'm watching this. Sorry, I'm watching this. You can see we have had profit taking by buyers at the 152.5. Now I'm back on the 1 minute chart. You guys understand that GJ is bullish, why it's fundamentally bullish, the technical structure on the hourly, 4 hour, daily. You understand buyers are printing highs, exiting positions, and profit taking happen that creates pullbacks. But we have had no bearish trend on GJ long term. We have had no fundamental reason for reversal. We've only had these pullback phases. Now I'm on the 1 minute time frame to show you how to identify this pullback phase and play that market structure. So Capital Hungry Private Chat will tell you that at the end of last week, we actually started to sell GJ, understanding the profit taking that was going to happen. You can see from the end of last week, from this peaked sell point, we have had this market structure essentially respected for now, right? We have had sellers printing minor lows, and we have not had a break out of this structure yet. Still not even yet. We also can see that right around 0.300 area is a strong support level. I would not be looking for GJ buys unless we could come above 150.6. If we can come above this rejection points right here, you guys are starting to see on the 1 minute time frame, and we can shift out of this bearish market structure and show more buyers momentum, and exactly where we had these 1 minute rejection points, I'll see easy buys above here. 150.6 is where I'm safely looking for GJ buys. That would show me a lot more buyers momentum. That would show me that this is generating buyer side liquidity in the market. Because right now, at this 150.5 level, which is previous high retest, right? We have had this reaction between buyers and sellers so far. We're still respecting the bearish market structure as well. I'd only be looking for sells on GJ below 0.200 because you can see the bounce here, you can see the bounce here, you can even see the bounce here. So if GJ continues to respect this bearish market structure and we break this 1 minute low and we come below 0.200, 150.200, then we can safely take 20 pip sells down. The reason why I didn't want anybody to jump in buys at the start of the London Open was due to this bearish market structure. Right? So I'm only taking, and this right here can also be a deeper liquidity grab. We could easily bounce around this area, then come back above these price points and take buys back up. Okay? I would not be taking sells unless we clear all of these 1 minute lows, respect this bearish structure, and come below 150.200. Why did GJ just drop 20 pips? Get the fuck out of the YouTube chat. It's fucking London Open, retard. The safest buys, Cam, intraday? Yeah, above 151. Like the safest buys would be above 151, yes. But for scalp buys, if we break above 150.600, even above here is a good scalp buy to start watching the scale in, you know? So GJ, with the current structure and the current price positioning, I would only be looking for GJ buys if we come back and the hourly candle turns bullish and we break back above 150.6. And I'm only looking for GJ sells with a clean break below 150.200. I do not want to start selling and get caught in a bounce at these lows again, as GJ has been in this range for almost a day and a half now, you know? So unless we clear these lows and come below 150.200, then we can easily take a continued sell scalp down, as we can identify that sellers are still in control just in the short term, as we're having this deeper pullback and correction phase, right? As we have this correction phase, you have to watch it accordingly. You can't start taking those buys back up to the highs until you break above that. Once you break above that correction phase, like I'm trying to show you guys, then you can start riding buys and you have a great intraday range back to previous highs. Similar idea now here. If GJ breaks below 0.200 and comes to 150, right? All you're gonna do is take this trend line as a visual representation and you're gonna extend it. That's all you're gonna do, and you're gonna continue to play that structure, right? Pretty much similar to like this. And until you get a shift out of that structure, you can't start looking for safe buys back up to previous highs. So that's all I'm trying to say here, you know? Because we can see with the short-term market structure, we're having buyers exit positions. And let's identify this again. This sell phase, this pullback phase, where is it coming from? It doesn't hurt to repeat and talk about it. New highs. Thank you, private chat. So this pullback phase is coming from new highs as we're trending bullish and in bullish market structure. So this shows us potential of buyers exiting, closing, profit taking, whatever way you want to say it. Because nobody stays in the market forever. You have tons of market participants. Okay, let me explain this as well. You know how you have the same type of market structure on the 1 minute or on the hourly or on the daily? It's because you have so many participants in the market that are actively trading various time frames. Whether it's machine-based trading and scalping on the high frequency time frames or on the lower time frames, whether it's people or banks or institutions that are trading on intraday time frames and day trading, or whether it's contract-based institutional long-term trading. With these various market participants, you have people that are constantly entering, not people, machines, whatever you want to say. I'm going to say market participants, right? You always have constant market participants exiting and entering the market based on their various profit goals. So these intraday traders who might be riding buys up and a new high gets printed, nobody stays in the market forever. The whole point of the market and trading is to make a profit and reap the rewards of that profit in the real world. Otherwise, there's no fucking point to this, right? A lot of people forget to cash out, withdraw, actually use the money in real life. But when you have this high printed and bullish trend, and we're getting this profit taking by buyers, yes, we're getting this aggressive pullback play and sell play, but you still have to understand the higher time frames on GJ are extremely bullish. GJ, this pullback phase, for example, we could have it extend all the way down to 149 flat, and I would still say GJ higher time frames is bullish. Does that make sense? Like, I could have GJ play around here and then bounce here, create a support, and still run all the way back to these previous highs. It would just be a more aggressive pullback, pushing price down to a deeper demand area. You know? What about Japan's intention to reduce inflation? Japan's debt structure and their inflation structure, especially with their negative interest rates, is one of the reasons why they are a safe haven currency, is due to how their debt structure is made up. You know? So the Japanese yen, even though Japan can take certain actions to try to reduce their own inflation, it doesn't change the fact that through their debt structure and through them going into negative interest rates in history, that they have become a safe haven currency. You know what I mean? So I primarily treat Japanese yen as a safe haven currency. And just to keep it even simple, to observe it technically, you could just look at the Japanese yen currency index. If I see a heavy spike on the Japanese yen currency index, you're going to see a stronger reversal move on your yen pairs, right? But you can see primarily GJ, since like late December, November, has been respecting more bearish market structure with sellers in control. Not GJ, the Japanese yen stand alone, right? Yeah, so see, we're just reacting here. We didn't break those lows yet. We don't want to take a sell unless we come below 0.200. We're not taking a buy unless we come above 150.6. The US dollar, the Japanese yen, and the Swiss franc are safe haven currencies. The US dollar is the global the world's reserve business currency. Swiss franc for their banking methods and offshore money laundering, pretty much. And then Japanese yen for their debt structure build with their negative interest rates. Okay, so gold, no clean confirms for buys yet. We're just watching it accordingly. GJ, we're not selling unless we come below 0.200. And we're buying unless we come below 150.6. We understand the higher time frame structure is bullish. We understand the overall market structure is bullish, but we are just currently in corrective bearish pullback structure. We want to see if the pullback is going to continue deeper and we'll continue to play that pullback, or if we're going to have buyers favorite this demand area, this demanded price, and start jumping in buy orders here, and we can identify that with a shift in structure. There is one too. It's the same thing. It's like that. It's sexy. Somebody showed me that in the private chat. It's sexy. SXY. The only reason I don't look at the Swiss franc standalone is I don't really trade any Swiss franc pairs. You know? But the little quote for CHF index currency is SXY, sexy. 60. Yeah, that's it. I just don't look at that individually. I look at the US dollar standalone day-to-day movements and Japanese yen, and then the volatility index, which is a good fear and greed indicator of the North American markets. And it's a good reminder for me to look at the dollar standalone now here. So US dollar has been ranging since last week due to the mess with the Feds, right? We can see so far in the intraday time frames we're bullish. So obviously this is going to cause some upside on pairs like UCAD. GU is going to have more potential to be bearish. Euro USD is going to have more potential to be bearish as well. So when we're looking at GU here, it's similar to GJ in the sense that we have a risk currency against a safe haven currency. Instead of the British pound against the Japanese yen, we have the British pound against the US dollar, right? But overall, when you're looking at the market structure and the flow of smart money, we have had the same type of idea. Buyers print highs, pullback phases, consolidations, breakouts, pullback phases, consolidation, breakout, buyers printed a high, pullback. Now, GU though is showing a more seller's pressure in my opinion than GJ potentially due to the short-term dollar strength, and with the indecision on the US dollar from the Federal Reserve sentiment, you can see the higher time frame consolidation zone we are entering. I would only be looking for GU sells if we finally have candle body closures on the hourly 30-minute below here. Yeah, that's just Japanese yen currency trading hours. You can still look at the price positioning of it just for a general glance, you know? I'd only be looking for sells on GU below 1.38. We're just in a higher time frame consolidation. We haven't broken significant highs or lows, and we're still respecting higher time frame bullish market structure as well. That you can see here. Yeah, I'm looking at the headlines to the left. We haven't had too many headlines. One sec. What the hell? One sec. Fucking XSplit freeze? Can you guys hear me still? This fucking broadcaster is so dog shit, fam. Hello. No, I'm just running a Pacific Prime ad. It should be. I'm still here. It says. Okay, we're back. Zoom. All right, we're back. Holy, scared me. Fucking XSplit trash ass. Oh, all right, we're good. Oh, scared me. You know, scared me, guys. It froze for a second. It froze solid for a second. We're back. I'm back. We're back. We're good. No, we're good. Everything's good. It froze for a sec. That's a good question, Willie. Yes, orders are always entering the market, but during specific regional market open is when you have orders that were waiting on hold enter the market from those specific regions, right? Yes, you have institutions and banks trading respected currencies of other countries around the clock. So that was a nice question. That's a very rare question as well. So what I want to explain is this, is you know how like during London session, people think like the UK banks, they only trade GBP for some reason, or London session only GBP and Euro moves? That is not the case. Every single bank around the world is constantly exchanging and trading every single currency, no matter what session it is. But during a specific session open, you have more market participants enter at that session open because the region is opening up. Smaller institutions, private firms, not the big banks, all the individual retail traders and investors, right? So that's why during actual session opens, you get this extra potential burst of volume as more order flows that were potentially like in a queue enter the market. You know, but what you said about currencies constantly being traded around the clock is 100% true. I'll show you guys that. Look at this. You guys want to see something cool? Do you guys want to see something cool before we... If you guys zoom in here, these are the different contributors in banks around the world. You can see them constantly contributing their specific data point of the bid and ask price for these different currencies along the left here. You can see it some of these are moving so fast that it's not even editing on the screen. You can see Barclays, JP Morgan, Bank of China, CIBC, fucking Emirates, constant every second. This is just an Asian spots bid and ask price, like what's happening with the consistent bid and ask price changes. This is only banks that are dealing in the Asian region, not even like the whole world. So look at the constant 1 point, potential 2 point changes in the bid and ask price every second. Look at the contributor changing every second. It's so fast that it's not even actually showing us how fast it really is. It's in milliseconds. You know what I mean? Euro, JPY. And these guys, these banks, when they're trading this, they're trading it primarily in US dollar currency. They're not trading currency pairs. They're trading the currencies alone, essentially against the US dollar. 90% is 90% is machine trading by these banks. Right? So look, the contributors, the bank, the time is like within the same minute. You see the high and low, the bid and ask of the Asian spot price ask for these different currencies. Constantly changing. And look, see this side? This is the location. London, Euro, Hong Kong, New York City, Regina, Cambridge, Jakarta, Sydney, Australia. So you're having Barclays from Sydney, Barclays from London, Barclays in Moscow, Asian Pacific Bank, RBS, Nedbank, Santander. Every fucking millisecond. You guys get what I'm saying? So when people say, oh yeah, I trade like a bank. No, you fucking don't. You're some dudes just sitting in your room, like me. You know, we don't trade like banks. Banks are trading primarily machine-based. And banks are primarily paying for technology development, mathematicians, scientists. So look at these market participants, and you're talking about these are big name banks. You're not this isn't showing any of the private firms. This isn't showing any retail order flow. This isn't showing anybody connected to these banks. And this isn't showing their order flow. This is showing simply their bid and ask price changes on these different currencies based on their data points. It never ends. Right? It's very interesting. It's a good wake up call to be like, to focus on your own shit, do what works for you, and not try to figure out how to trade like a bank. Banks are massive billion-dollar corporations with thousands and thousands of employees, people getting paid full salaries to do individual tasks for that bank. You know what I mean? Like, for example, a bank, you know how some people say, oh, I have an algorithm from a bank, or I created an algorithm similar to a bank. Any bank trading algorithm probably had about 30 people involved with it. 10 mathematicians, 10 developers, 10 quality analysis checkers, 10 project managers on it, 10 analysts to watch it and tweak it constantly. And you're talking about people who went to school in these fields and are getting paid $50,000 to $100,000 salaries, and that's their job every day. That's their 9 to 5, is managing that algorithm. You get that? And you think some Joe Blow got some algorithm fucking with what, in Miami by himself, named Lambo Raul, or named fucking like anything? No clown on IG has made an effective algo. Sorry, and it's not gonna be effective. They all follow the same path. I don't care who it is. It's just classic. You cannot compete with these guys. You're not on the same level. You don't have the same knowledge, same resources, nothing. This is a whole different beast. Look at the locations, the deals changing. I can't zoom in on this, but you guys can see it, right? But yeah. Okay, let's watch GJ. If we come break below 0.200, we didn't break there yet, obviously. And we're only taking buys above 150.6. Here comes GJ, looks like. GU, we're only selling below these candle body lows like I was talking about on the 1 minute time frame. even a bit safer below the key level. GJ's coming to 0.2 as well. This is why I didn't want anybody to start jumping in buys right away. And US 30, I don't want to touch Euro USD. Euro USD has been pretty messy since last week with the Fed Reserve interest rate. But we can see that short-term dollar strength kicking in now. You know how we were observing that strength on the dollar index individually? And we said that this would give us higher potential for GU sells, Euro USD sells, and potential UCAD buys. But we'll see that. Yeah, we're taking sells only if we break below 3.8. Otherwise, oh, let's see if gold sets us up, fellas. Oh, gold, we got close, eh? But we didn't break above that price point. See what I was talking about here? See how it came right there and rejected? Imagine if you jumped in a buy. I give you guys the best advice. Imagine if you jumped in a buy here at 17.39, then you're gonna get a quick 15 pip stop loss hit, then it's gonna come back up. Once we clear these 1 minute highs, it's gonna give a nice upside move. You took a L on GJ. What did you try to do on GJ? Did you try to enter a buy too early? Even though we said don't enter buys yet? Oh, that's how GJ did you? If we break below 0.200, then we'll take this sell range down. Otherwise, I want to watch how we react exactly at 0.200. And this 30-minute candle just opened up now. It's a fresh 30-minute candle, no upper wick yet. This is a new 30-minute candle, no upper wick yet. New 30-minute candle on gold, potentially showing us some more buyer's pressure as well. Oh, 1 minute left. Sorry. 1 minute left. 1 minute left. Sorry. No, that's not the 30-minute yet. All right, so this is looking good. If we can get this candle to close below 0.200 in the next 30, just create a quick upper wick. That'll look good. Yeah, the bearish market structure here is why I didn't want anybody to jump in buys at 0.500 and why I was looking at this specific rejection point. Now, okay, now it's the new 30-minute candles. Why do I feel we're going to get a very aggressive buy bounce here if we break above 0.200? No, we're sticking with our sell bias. I think we're going to go down here. We're good. If we can have a little resistance formed below 0.200 here, a couple of bearish candles, it's looking a lot better. But this is just the initial reaction with this new 30-minute candle. So I'm just watching the price action for at least a couple of minute candles here. Gold, no clean confirms for gold. See that rejection right there? That's a good idea, Vikram. I like that. Yeah, let's do some US 30 analysis. I'm just watching here because if we can stay below 0.200 and see more bearish impulsive candles, smaller bullish candles, then we're good. But if we start to create a flat candle body support here in an order block and we break above the order block, then we're going to get a deeper pullback, you know? Other than that, 30 looks good. Gold wiping out accounts. Why is gold wiping accounts? Nobody should have entered a gold buy. Where did I tell you guys of the price I said enter a gold buy? Type it out. Type it out. What price did I say, guys, this is a good gold buy price? Thank you. Thank you. Thank you. Exactly. Someone said 1840. All right, just give me 1 second here before we jump back to the charts. I just gotta go take a piss quick. All right, I'm back. Yeah, I'm just reading some of these headlines quick. All right, GJ is looking pretty good here. As long as this 1 minute candle doesn't engulf this candle, nah, this isn't looking good now. If this closes as like this, that's not looking as good to me. But if you're still in a 0.200 entry, I would just keep a fairly tight stop loss. Oh, GU setting up as well. GU set up at 3800. We're watching 3800 here setting up. Euro USD, we didn't touch today. We didn't get time to look at that. That's all right. Let's look at US 30. GJ with the 1 minute price action. I just didn't like how that last 1 minute candle closed bullish and engulfed the other one. So I could see us coming back to 0.200 is all I was saying on GJ. I was just watching the 1 minute price action. As long as we have candle closures below 0.200 and show more bearish candles, then it's still good. But if it comes back to 0.200, I would close out if you got an entry there. All right. Now, US 30. You can see that US 30 is following a similar concept after the pandemic crash as other global equities, with overall market optimism and investors being more confident, leading to continued upside with only having pullback phases. Right? I personally do see US 30 in a corrective phase now, or starting to come into a corrective phase, meaning buyers potentially starting to take profit and exit positions at these new all-time highs, peak just a bit above 33K. Even if we get a pullback down to these previous highs on the higher time frames, we would still be extremely bullish. We just want to be able to observe this corrective structure, or where this pullback phase is going to reach and where we can start jumping in buys again. I have not been looking for any US 30 sells pretty much since 8 months ago, where I was looking for sells here. Once we had this pullback phase get canceled out, even when the pandemic was extremely rampant and strong, I was like, fuck this. The Federal Reserve support is way too strong here. Cam, break back above 0.200 with a double bottom, high risk, high reward buy area? Yes, Cam. If we on GJ end up having candle closures back above 150.200 and we create a order block, that is a high risk, high reward buy area, only above 0.200. But anyways, so when we're watching US 30 now from this higher time frame point, and keep in mind the hourly candle close in like 25 minutes. But anyways, when we're watching US 30 from this higher time frame point, we can start to potentially identify some pullback structure that we might be entering. as we come down to a more favorable demand area, right? I personally am looking to see where we're going to come down to, and I would prefer around 32K flat. We might not get that aggressive of a pullback, but if we can slowly start making our way down in that sense, similar to here, as soon as we break above that structure, we'll have a continued upside move playing that game. So what I'm primarily looking at on US 30 is how we're going to react. How we're going to react around our 32,600 key level. If we break below here, I can see deeper corrective sells. If we don't break this area and we come above the bearish market structure around 32,800, then I see buys. All right. GJ, you guys want me to check the 1 minute price action for you? This is looking like it's starting to create a bit of an order block, just a bit below the key, just a bit below 0.200. So I would get out of any GJ sells and wait now. It's starting to create some flat candle bodies here. We're starting to see weaker bearish candles. We're starting to see more bullish candles. I would see if we could break below this order block, then we get an extended move to the downside. But otherwise, if now we come above 0.200, so now you could still have time to exit if you took a 0.200 entry without taking a L. We're just watching the price action objectively. We might get something like this with a quick little pullback and then jump down, where we might get something like this happen and then continue down. All right. I'm just watching this 0.200 area very carefully over the next 15-20 minutes. GBPAUD, I'll check in a second. Just let me finish US 30 there. I'm not liking this, like even if it melts right now, I'm just not liking this price action too much here so far. You know what I mean? I like how we're still staying below 0.200. GBPUSD still below our sell area. Has gold broken above yet? Nope, not yet. Gold's coming. I don't want to jinx it. Gold's coming. That's what we were just talking about, Chad, is if like this is why I was advising people to exit, is because of this price action here wasn't showing me as much seller's momentum. We weren't having clean bearish candle closures down all the way, and we're seeing a stronger reaction in this area around 0.200 just for now, you know? I'd only be looking for buys if we come above 0.200, where we're still rejecting for now. And gold is, I think gold's about to pump it. I don't want to jinx it, but as soon as once it breaks that 1740, I think we're gonna get a nice squeeze on this bitch. A combination of both, AB. Yeah, GJ's just playing around here, creating a bit of an order block. There's no, I don't see buys on GJ unless we come above 0.200. Is Dixie back to the top of the intraday range? Yeah, here, eh? This area. Very key area for us to watch on the dollar. I jinxed gold. Sorry, guys. I jinxed it. I thought that burst was coming above 1740. Yeah, US 30. If we break below 32,600 with this bearish market structure being respected so far, I would start to take some high risk sell scalps below 32,600 for 160 points and potentially deeper to 200 point range down to 32,400. I'd only be looking for safer US 30 buys at this point if we could come back above bearish market structure and this price sensitivity zone. All right. If you guys can give me 2 minutes here, I just got a quick phone call I got to answer from my girl. I don't know what the fuck she wanted at this hour. Yeah. He is talking to me, someone. Why are you so nosy? Man, it's like everybody's like, what did your girl call you about, huh? What was so important at this hour? Why are you guys so nosy? The hell? I don't have to tell you guys. I don't have to tell you guys that. Hey guys, also don't forget, for any of you guys that are feeling impulsive, stupid, emotional, don't forget, stay smart. Follow your trading plan and trading rules. Has GJ, what's GJ broken above? Has gold broken above yet? No. I don't want to jinx it. I'm not saying shit about gold. Last time I said it, it came back down. I think it's coming. I don't want to say it yet. GJ still creating this little order block. If we were to break above 0.200, you could have a 5 pip stop below 1.5 here is like where you'd put your stop if we start to get some candle closures above here. You know what I mean? For a little pullback. You can grab 10 pips or something. Feel me? New 15-minute candle. This is a new 15-minute candle creating its upper wick. Just watch it. New 15-minute candle. This isn't like a break above 0.200 just yet. You know what I mean? It's a new 15-minute. Oh yeah, the new 4-hour candle as well. This holy man, I hate this time change. Feels like you got no time during London, doesn't it? You come straight. I want to go back to the normal 3 a.m. I like that little 2-hour window till the, yeah, like what the fuck? Because we have a new 4-hour candle as well in 15 minutes, and you guys know what that means. It means higher potential of pullbacks and deeper liquidity grabs. So let's look at our 4-hour across the board and start looking at some setup. I hate this time change London Open, man. I like doing this 3 a.m. Eastern. Because then we come on at 2. We start trading for that 2 hours for any scalps from 3 a.m. till 5, till the new 4-hour, and then we look. When you have 4 a.m. market open and then 5 a.m. the 4-hour candle close, like fuck. You feel me? All right. In about 13 minutes, we have 4-hour candle closures across the board. If candles close off as is, we're still having gold respect this higher time frame consolidation, failing to break these previous lows and this support level. You know what I mean? Yeah, doesn't it feel weird, guys? It feels off. That's why, like, fuck, it just feels off. But anyways, so we're still in a bullish bias on gold. We just haven't had a clean break above that price point or the safe 1747 area. But the 4-hour candle is at least potentially closing bullish. When we're looking at the price action of the last few hours as well, you can see the bearish price action is getting significantly weaker and weaker, with this last bearish candle having a very large wick rejection at these candle body lows and a very weak bearish candle close, with this candle potentially closing bullish, engulfing this and the previous body. Right? So the price action for buyers' momentum on gold and the buyer's bias is still valid into New York. And remember, guys, even though London wasn't that eventful, like I know we had that quick sell play on like GJ and GU that we really didn't get to take advantage of. Other than that, gold ranged. But these same trade ideas I laid out to you guys across these pairs are still valid through New York session, right? GJ new 15-minute is just creating a bit of a lower wick. I wouldn't see continued seller's pressure unless we broke these candle body lows. I think the 15-minute is just creating a bit of a lower wick. The new 4-hour might come revisit here, then pop back up, but I'm just watching here. I still think we're going to bounce above 0.200. But we have 12 minutes until the new hourly candles and 4-hour candles. And let's see how the GJ 4-hour is closing here. So GJ 4-hour, price action wise, very strong bearish pressure with very weak bullish price action here. This pullback that failed to break above 150.800 is only like 5 pips above it. and then you had a strong bearish candle close. This 4-hour candle grabbed liquidity, and a bearish candle close below these wicks and bodies. This following 4-hour candle does look like it might actually just create an upper wick and give us a quick bounce to retest like 150.5 and then possibly continue back down. You get what I'm saying? For like the new 4-hour candle, it would be ideal if the 4-hour candle gave us a bit of a bounce from 0.200 here. And then we'll see. And as long as we continue to respect this corrective structure, we'll ride corrective sells down. But we might be able to get that buy bounce at the new 4-hour candle is what I'm saying, for a scalp at 0.200. A nice little 10, 20, 30 pip bounce off 0.200 to 0.500. Higher time frame key level retest. Same thing with GBP USD though here. It still didn't close below these candle bodies. I like the seller's pressure and the fact that the US dollar has some short-term strength, but I don't like how we have not been able to close below here for an extended period of time. LOL, my gold analysis was right. Gold literally moved up and down 15 pips for 3 hours, bro. You guys must be fucking retarded, I think. Some guy said, LOL, my gold analysis was correct. Fucking gold didn't do anything. The fuck are you watching? It's a LOL, my gold analysis is correct. It's coming now. I don't want to jinx it. This is the one. This is the burst coming above 1740. Trust it. Here's a little pullback coming from 0.200 we're talking about. Let's see what the new 4-hour brings in 9 more minutes. 9 more minutes. Yes, sir, guys. Yes, sir. Yes, dollar index does affect gold. Very true. But it hasn't been having as much of an impact recently. It's been more impacting our US currency pairs. Yeah. No, I validate support and resistance with lower time frame price action. All right, no, sorry. I just want to see how these 4-hour candles are like closing across the board. US 30 is a pretty weak 4-hour candle close here. See how we were creating this flat candle body support and we're still closing above 32,600? This could easily be the pullback phase, and if we don't break these lows, NYSE could continue us back up. I'd only be looking for sells on US 30 below these candle body lows around 32,500. Otherwise, I'm still in a higher time frame buy bias on US 30 like I have been. Yeah. Yeah, gold, we're coming close. It's just been ranging all night. This London session's been pretty weak, guys, in my opinion. What do you guys think? This London session compared to previous sessions, like GJ did that 20 pip drop and then slowed down. Gold did fuck all. GU did that 20 pip drop and then slowed down. We haven't done, it was a pretty quiet session. You feel me? All these trade ideas are still very valid. If you guys want, we can start looking at people's charts now, just because, like, I think it's best just to wait for New York. It's a garbage London session today. I think it's best if we just start doing some analysis. If you guys want to start sending charts and we start GJ can bounce to 0.500 retest again, or even 0.400 on the new 4-hour candle after bounce from 0.200. Yeah, if you guys want to start sending charts in the YouTube chat, I can like review them. If you guys want to start asking questions, we could do a little Q&A period. If you got anything for analysis on gold, GJ, Euro USD, and sorry, USD CAD and US 30, make sure you just rewind this webinar to the start, because we already ran through that analysis. I'm talking about if you guys want to look at anything else, you know? Let's look at some of these off pairs I got going on here. Nope. Do you have any specific key levels on US 30? Yes, sir. A lot of them have alerts already, Andres, that will get sent to the private chat from 30K above. All these levels are alerted, so whenever it gets hit, it'll send that alert to the private chat. You know what I mean? Oh, sorry, Reno. Yeah, this was a rushed ass. Bro, what the fuck you entering at? Oh, you had a buy stop. Oh, shit. Bro, problem point is also all of this. Like, you didn't really clear, like, you know what I mean? We didn't really clear above, we cleared above that by what, half a pip, and then snap right back? Yeah, this was a very, very impulsive rush trade that you also entered before London Open itself. Reno, I've been noticing with you specifically that you enter a lot of trades before volume. And then you're looking to like sort of sometimes catch up with the actual session. Is this true or false? Yeah, I think you should be more patient and plan out some trades and actually wait for the volume setups to kick in. You know what I mean? You're trading at like pre-London hours where a lot of the volume and volatility is taking you out. But this was a very strong rejection, man. Like if we come to GJ here on the 1 minute, you're talking about here. You had a buy stop here. This price action is not good. Like that as you snap back, this as you snap back. You know? Alright, is this the new 4-hour candles? No, it's not. New 5 minutes. Let's see how we do. I'm just waiting for these 4-hour candles to close. But it's okay. Live and learn, you know? If you guys are scalping, then actually trade during the sessions to play with the volume. If you're intraday trading, looking to hold through sessions, then you can obviously take entries maybe late Asian and later on, and then hold those entries overnight or through New York session as well, right? Yes, sir. Gold, no breaks above 1740 yet. Teasing the boys, teasing the gang. This guy Sankey said a great quote. He said a great quote in the banter chat. Let me search it, man. It's that fisherman, not Patrick shit. Fish. Where is it? This was a great line here. The trader must have the patience of a fisherman, the discipline of a martial artist, the risk appetite of a poker star, and the diligence and work ethic of an Olympic level athlete. The successful trader must encompass all of these various traits and be able to have them work hand in hand. right? If any of these is lacking, you're most likely not going to be performing to your most optimistic point as a trader. Yeah, that was a great line he made up. So the trader must have the patience of a fisherman, the discipline of a martial artist, the risk appetite of a poker star and poker player, while still having the work ethic of an Olympic diligence of an Olympic level athlete. I'm gonna tweet this right now, Sankey. If I get like 100K retweets, I'll send you a check. At least fishing won't lose you any. Yeah. That's true. That's a sick quote, eh? That's a really sick quote. Look at these dickheads. Holy, at least they replied. I was like, holy fuck, XSplit fucking trash. They're like, oh, I'm sorry to hear that. This is the XSplit broadcaster I use. These guys suck, man. I'm gonna use the one you guys told me, OBS. This one. You guys are telling me to use this. Wait, which one? Streamlabs or OBS? Open broadcast software I should check out? Because this one, XSplit trash, fam. Streamlabs or OBS? What do you guys think? I gotta change it up for Thursday stream. Oh shit, new 4-hour candles, guys? 5 a.m.? 5 a.m. Let's see these new 4-hour candles. This looks like this 4-hour candle is just making a lower wick first. Sells are still valid, but I think we're going to create a lower wick and get a bit of a more aggressive pullback here. See how we didn't break these candle body lows just yet? If we don't break these lows, I think that 4-hour candle is just creating a lower wick. And if we come back above 0.200, we might get an aggressive pullback just for the new 4-hour candle. You know what I mean? So I'd be watching this area, and I'd only take sells below these lows. I think the new 4-hour might create a bit of a more significant upper wick and give us a pullback pre-New York, and then like something like this we can take advantage of even. So new 4-hour candles. GJ was first pushing down and create that lower wick, it looked like first. Streamlabs is made from OBS, so I should use OBS then. Gold new 4-hour looking juicy. And already created a very nice bullish candle close. Already created a lower wick at 1739. We just need to bust this zone, guys. And we can get a nice gold buy here. I don't want to jinx it, though. I've been jinxing it hard. I've been jinxing it hard. I'm watching here. If we break below 1.5, then you guys can take a 15 pip sell scalp. Otherwise, I'm watching the 4-hour. I'm watching how this 4-hour candle's setting up just to open up now. Fucking gold, man. 1740 is our buy spot. 1740.5. Streamlabs is easier. Okay, I'm gonna check out. Oh yeah, these guys are fucking defending me, yo. Stop the Asian hate. Fuck yeah, yo. Love, defend Indians. Fucking Twitter's so weird. You don't get to say anything on Twitter. Yeah, I'm gonna check out Streamlabs for the Thursday stream. All right. Yeah. GJ buys are, I think GJ pullback buys are gonna be setting up if we come back above 0.200. Do you guys see what I'm talking about here? That 4-hour lower wick being created. Come on, gold. Break this fucking area. Never mind. Actually, let's try some reverse psychology on gold. Gold, melt. Drop 100 pips gold. I'm about to take a gold sell. I'm about to enter a gold sell. Let's about to put reverse psychology. Hey guys, let's enter. No, actually, some people are going to really enter a gold sell. I can't say that. I can't joke around on YouTube because some people will take it seriously. Yeah, you're right. Someone's going to take it seriously. Someone will take it seriously, you're right. Never mind. I was just joking around about that, guys. Trying reverse psychology as a joke. It's not real. It's not going to make a difference. Yeah. Oh, sorry. Some of you guys sent some charts. I'll check it out. Hey guys, make sure if you guys enjoy these streams, you like, subscribe, and share it around. Even a simple like makes it that I get more exposure. The more likes a stream gets, the more exposure it gets, and that's free for you guys to do from your end. So like all you have to do is like hit that thumbs up button, and then if I get more views and I get more people coming to the streams, guess who's gonna want to stream more? This guy, right? But if I get less views and less likes, guess who doesn't want to do this shit anymore? Same guy here, me again. Right? GJ 150.2, waiting for the 30-minute to flip bullish and take buys. Possibility, yeah, your sell and buys is very similar to what we're talking about. Yes, sir. Yeah, I agree. If we don't break these lows at 0.200, I still see a potential bounce from this area. 150.200 area. I'm watching it very carefully on this new 4-hour candle. Gold buys above 1740 area we're looking at. 1739 was early. Dude said you should be doing the YouTube stream because you have a passion for it. If you do it for the likes, just give up. Bro, shut the fuck up. Like the stream, you retard. The fuck? The fuck do you think this is? Fucking everybody doing shit because of passion for it? What are you, a fucking kid? Are you living in a fairy tale world? What a fucking retard. Wake up to the real world, buddy. People do shit for views, money, clout, to get value out of something. Nobody's doing shit because of kindness of their heart. Shut the fuck up and like the stream and keep your mouth shut. Send it a like and shut up. Nobody fucking cares, bro. Just send it a like and shut up. Just hit the like button. It's that simple. There's no fucking there's no debate here. Tap the like button and then keep your mouth shut. Say that's it. Man's living in a fucking Disney movie here. Man trying to be influential and inspirational in the wrong area. You guys are funny, man. Alright, let's see what's going on here. GJ's coming back below 0.200. It seems like we're not gonna, it seems like we're having sellers still break these potential lows. The 4-hour created, did the 4-hour create that upper wick at least? Yes, it did. Yeah, the 4 hour created that upper wick. This would look like it's coming back down now that we've created that more significant upper wick there. I'm just watching these order block lows here. I'm just watching this little OB forming. Because I wanted the 4 hour to create a lower wick, stay above 0.200, and then have a deeper pullback pre-New York. But it already at least created that upper wick. And now if we break below here, GJ's going to melt. Gold did not give us any safe buys. The gray box is where we're looking at. You can see all the rejections here. Gold has just been ranging. Gold has just been ranging. GJ sells below these 1 minute lows is not high risk. That'd be a nice sell. But right now, GJ is just playing in this order block between highs and lows on the 1 minute time frame. Yes, exactly. Somebody sent a chart. Yeah, you guys did. Yeah, no, we haven't had. I've been scanning the headlines back and forth here, the breaking headlines. We haven't had too much there going on. Yeah, because that 4 hour made that upper wick. This looks like it's about to like come break these candle body lows, and then if we have some impulsive candles similar to this. Someone said Jeeve is a stinky packy. Fucking. You guys fucking jokes, man. Oh. Please have a look at US oil. If you want to send a chart on US oil, see, oh man, we still didn't break. If you want to send a chart on US oil, I got no problem checking it out. Yeah, this London session was dog shit tonight. We had that quick 20 pip play on GJ that we didn't even get to capitalize ourselves. And other than that, I didn't take any trades tonight. I didn't take any impulsive trades or like try to guess. I didn't get any confirms I was looking for GJ or gold yet. You know, it was a pretty trash London session. I'm still going to be looking for some opportunities through New York for the same trade ideas I laid out. Oh yeah, guys, our GU, this is looking good for GU. At least we're finally starting to get a candle that closed below and is potentially coming below here. GU is also looking good too. As long as we break those candle body lows on the 1 minute order block. Same thing with GJ. As soon as it breaks that 1 minute candle body lows, we should get an impulsive drop. Once we break here. It's just bouncing around. Euro USD we did not touch tonight. USD CAD we didn't get to. And US 30, oh shit, did we watch the US 30 4 hours still closed above 32,600. This 4 hour at least made a bit of an upper wick. I'm still bullish above 32,600 on this pair though. Gold's teasing the gang. Gold has been going up and down. Gold has been going up and down, teasing the gang. The 30 minute is just in a range. We've been in this range. Besides this up and down Federal Reserve move, we've been in a range on gold and on most US dollar pairs due to the Federal Reserve constant up and down nonsense. I usually stream Tuesdays and Thursdays starting like an hour before London Open. Somebody said, why is it so difficult to respect each other regardless of your skin color? It shouldn't be. It should not exist. Stop the hate. And then I said, yes, go India. Some people take shit too seriously on Twitter, where Twitter is just a big cesspool. Twitter is just a big sewage dump area, you know? Yeah, gold's just bouncing around here. It's been ranging all night. We didn't execute anything on it. GU's looking better. GJ as well. At least it's finally breaking below. See what I was talking about here? Gold, not touching. Gold or not touching. Oh, you guys seen what they did to Trump over here too? They put fake next to his name on Telegram. Trump got banned on Twitter and all that shit, right? But on like Telegram, he didn't get banned. They put a big red fake stamp next to the guy's name. You know what I mean? They put a big red fake. Before it said scam. Like he was some like Forex signal seller. It said scam before. It was pretty funny. Yeah. His real account is over 1 million subscribers. On where, Oscar? Telegram? He has a new one? Is it Donald Trump? No, bro, this is the only one. Oh, this one. Oh, Donald Trump. This one? Oh, this is the new Donnie. So this one was the POTUS. The other one was the president one, I guess. Or what was this page? The fuck was this? Let me go follow the real Donnie. Where the fuck is it? Let's go. Let me go join the real Donnie. So this guy's still been going on it. Oh wow! I thought they shut his ass up. Yeah, GJ and GU look good if you guys entered at the break of the low or at 0.200. Once we broke back below it with that 4-hour candle, when I was telling, remember I was telling you guys like that 4-hour candle looks like it just created its upper wick. I'm gonna go make a coffee and hopefully gold will do something. Hey. If you guys get a quick 10-15 pips, man, just take it. This has been a shitty London session. What's a good target? I usually like to go from like PPL to PPL, like psychological price level to psychological price level. So I would like to go to 150. Does this concern me? Not as much. I don't really look at 15-minute candles as much. More if it was like on an hourly candle, that would concern me. There you fuckers go. Finally, give me a W in the fucking chat. Oh man, chair done. Scalp done. Fucking take it. Take it and get out. Take it and get out. Take your 10-15 pips and get out. GU, same shit. Quick little burst. Take it. Just take it. If it drops more, it drops more. No, I didn't enter that. Holy shit, G just had a Vindaloo curry explosion. You gotta relax there, okay? You have to relax there. Guys are... Fuck it, finally, man. Even if you guys waited for the break of this low, 12 pips, if you entered at 0.200, You got 15 pips. At least you got something, you know? Yeah. No, I feel you, Nyan. I feel you. I feel you. Yeah, we're buzzing over that little move. Let's go. Melt. Tap 150. Tap 150 for your guys' runners. Tap 150. Smash it. Are you guys in GU or are you guys in GU or GJ? Gold's just fucking ranging. Gold's just been fucking ranging all night here. Gold's been doing this since we came to the charts. 3 hours we've been watching this bullshit on gold. Fuck that. Fuck gold now. There's the 150 TP you were asking me about, the next psychological price level. As soon as I said I'd like to the next PPL, and it went there. Fuck. Alright, should we look for some buy bounces? Should we get some buy bounces? No, I'm kidding. Don't overtrade, fuckers. But you see the reactions at the PPLs? PPLs are great. You guys better send a quick like on the stream now. After the W. Finally, man. But do you guys understand how I adapted in real time when the 4-hour candle made that upper wick and then the price action wasn't looking as good? So I was saying the buys no longer look good here. It's looking like more sellers pressure. If we clear these lows, we can get a nice scalp play. That's why. What we were watching was this. Let me clear this up, okay? So I want to take it step by step for you guys. So the new 4-hour candle opened, right? When the 4-hour candle opened, we initially rejected these candle body lows and started creating that 4-hour lower wick. As we pushed back above 150.200 and got a very strong bullish candle close, I was anticipating a potential deeper pullback that we could take advantage of. But as you can see, we got this bullish candle, which was great. But then this following bearish candle after that 4-hour upper wick was created, showing and failing to break this order block high point and then quickly snapping back below 0.200. This is when after that candle closed, here I said, hey guys, this price action is not looking as good. Understand? After this point, when we failed to break back above 0.200 and had this following bearish candle, then I anticipated if we can finally clear these lows and break the order block, we will go to 150. The higher risk sell area was when I was talking about, hey guys, this looks like the 4-hour upper wick was created, and the safer sell was below these OBs. Below the order block 1-minute lows. Okay? Then you can see once we finally broke that low and cleared it with a candle body closure below it, this gets validated as seller side liquidity, and we finally got that impulsive move down to where we wanted. And the same idea where we were already in that bias for GU. GU, this was our sell zone anyways for GU. And we got some negative UK headlines as well. Alright. A PPL is a psychological price level, specifically for GJ. So you guys, either this trade idea on GU didn't change. We were looking for GU sells anyways because the US dollar was showing us more strength. This was our GU sells from right off the start of the webinar. we adapted to these GJ sells in real time by watching the price action at this order block that was forming and this specific price action here. And you have to understand that GJ, now we also didn't break that bearish market structure. So remember what I was telling you guys on GJ now, on the hourly, this bearish market structure, we just extend it now. So when you're looking at GJ here, now if GJ was to do a pullback or bounce from here and pull back to this area and fail to break, would you could, this is another sell opportunity area. Now we're going to be looking to play this corrective bearish market structure. All we did now is the same trend line that was connected from this point. Because we failed to break the structure and we went to a new impulsive low, we extend this trend line. The trend line is just a visual representation to make it easier for us to observe market structure and the buyers and sellers' strength. So as soon as we have sellers now create a new low deeper than the previous low, we're extending this structure out and we're going to continue to play this structure. With that being said, now that we've extended this structure, a quick quiz for you guys. On an intraday time frame, where would be the safest price point to take GJ buys back up to these previous highs on the intraday time frames? God damn, you guys still holding sells? Quiz. From this current price point, from this current piece of market structure, with what I teach you guys, what would be the safest buy area for safe higher time frame GJ buys? $149.500? No, $149.500. If we were to come down here and extend this structure, down here would be high risk buys. Where would be the safest buys? 150.5, 151, 150.8. Anybody who said a price point above 150.5, your answer is correct. If you guys said above 150.5, you're correct. For multiple reasons. One, you're breaking above the bearish market structure. Two, you're breaking back above our higher time frame historical key level. Three, you're breaking back above that previous low. And four, you're showing buyers momentum back with the higher time frame structure. Just like I've shown you corrections phases anytime before. Until then, now we're having this corrective structure. Just like here, you had this impulsive low created, right? You had this consolidation phase that failed to break the structure. Same idea now here. Even if GJ pulls back to retest 150.2, even if it goes to retest these previous lows in bearish market structure, if it doesn't break that point, we're still riding corrective sells down. Does that make sense to everybody? All I did now is this same trend line, which was sitting here at the start of the night. I have now extended it out because we're still playing that market structure. So now through New York, through the rest of the week, watch this structure on your intraday time frames, 15 minute, 30 minute, 1 minute. Play this structure. Right now, since the end of last week, on the intraday time frames, buyers are taking profit and sellers are pushing price down to a better demanded price. All right? And the safest higher time frame sells, like Cam said, would be below our higher time frame bullish market structure, below 149. I just wanted to give that little quiz because it's no different than when we've observed bearish market structure anywhere else. This was just much larger. You start to get your first signs of exhaustion here. You can't start taking safe buys until above 148.8. Then you start riding back to these previous highs. Here, This is a smaller pullback phase. This pullback phase, instead of lasting a few days, this only lasted about a day and a half, right? You had price come down from this high down to this previous low instead. You start to get a support created. Once you break above that structure, you run back to these previous highs and you play that range. Until then, you play the bearish corrective structure, or you just stay out of the market and you wait for the higher time frame buys to set up. Same thing here now. Don't start guessing buys at every single support created. Yes, those are high risk buy areas, but the safest buys are going to come if we can validate exhaustion and then validate a shift in structure. Then you're looking to target these highs again. All right. So let's get a nice W in the chat for GJ, for GU. Euro USD, we didn't touch. UCAD, we didn't touch. US 30, we're watching reactions at 32,600. Gold has been fucking messy. We didn't touch. And thank you, HBN Red, saying all risk currencies are falling. I love how you're speaking in that verbiage and terminology, because whether it's GJ or if we go to AUD/JPY, we're going to see the same move. Whether we go to Euro JPY, we're going to see the same move. So that terminology that guy just used is very, I like that. I like how you said all risk currencies are falling. You're having buyers exit positions out of all risk currencies. You're not just looking at only GJ. You're seeing the movement of smart money throughout the entire market. Right? But do you guys understand why I was more on a sell bias from like this point? I just wanted the clean break below these lows and below 0.200 for us to have our confirms. Because at the end of the day, the sells are still a counter trend trade to the higher time frame bias. So I like to have as many confirms possible when I'm looking for a sell. And the private members will tell you that too. I rarely look for GJ sells the last 8 months. Unless I got all those confirms of structure, of buyers exiting positions, lower time frame price action, and the seller's pressure, I've primarily just been calling out GJ buys at pullback areas or consolidation breakout buys. So I really want to wait for those confirms when we're looking to play sells. Anybody still holding GU or GJ runners? And see how once you broke below the order block with the bearish trend or lower time frame trend, you get that impulsive move. Does the private chat help find key levels? The private chat will help you find your true inner self, to be honest. Private chat will help you find more than shit in trading. Yeah, the private chat, but to answer your question, yeah, it does. The private chat has over... For anybody asking about the private chat before I go now and asking about all the educational stuff, you have all these educational webinars in the private chat that aren't on my YouTube. They're just for private members on technical fundamentals and trading psychology from what I've learned over like the last 4 years now. The key levels one that you're talking about is these 3 webinars: candle bodies, trends, key levels and trends. These 3 webinars just are specifically on key levels, trends, and everything else. Then you have stuff like psychology, fundamentals and technicals, psychology, market structure, understanding lower time frame, higher time frame, market sentiment, volatility, everything and anything. Not everything in the market, but you get what I mean. You got a lot here. Even got my old Instagram rants when I used to be on IG with like 20,000 followers. Ranting away about the world, you know? So in the Capital Hungry private chat, you pay me for a monthly period of $100, right? The ones at the bottom are my old IG live recordings. So what somebody pays me for, and you have to understand now, Capital Hungry has history. The private service has been running for almost 2 years with hundreds of people choosing to pay month after month, right? I wanted to create the service in business with that structure model so I can advertise that down the line. Because if I can say Capital Hungry has been active for 2+ years or coming to 2 years with people choosing to stay month after month, that in itself is a selling point. You get what I mean? That's the whole reason I created it as a monthly subscription based business. One, it gives me incentive month after month for a monetary gain and a secondary income. Two, it also gives incentive for you guys to give some freedom. You don't just pay a crazy one-time fee and get tossed in a fucking group with some cookie cutter Fibonacci course. You know what I mean? You can come in Capital Hungry and within 30 days fully experience the service and make the decision if you want to stay another 30 days and pay another $100, or if you want to cancel like a Netflix subscription and never see me again. You don't have to pay $500, $1,000, a one-time fee, and then you pay that $1,000 and you end up in this chat like, what the fuck am I doing here? You know what I mean? Then it also gives incentive for me because I know that if I don't provide consistent quality analysis, webinars, and service, people will leave, right? It's not like people just paid me $1,000 one-time fee. I send them a cookie cutter course and it's like, go fuck off now. It's a month-by-month payment system on both ends of the coin, right? If I don't keep up my end of the bargain and my end of the service, then nobody's gonna stay. You know what I mean? So that's why I wanted to keep it in that type of subscription-based system. I was trying to look at other mentorship services or trading services and seeing where they go wrong from both ends. The first is signal chats. We all know that shit fails. The second is cookie cutter courses where people will pay $500, $1,000 for a course and get no value out of it, and then end up calling people scammers, right? And what I noticed was people would pay a large one-time fee for a course or a service and then pretty much end up just going through this cookie cutter course that you could probably find on Baby Pips. And holy fuck, GJ, blessing the fucking gang. Let's go. Let's go, GJ, blessing the gang. But anyways, so just to rant about that again. So what I noticed was too many people paid a large amount for a course or a one-time fee. They don't get their value and they end up feeling scammed. But it's because they don't do their due diligence. They usually get caught in a marketing tactic, whatever it is. But so many people follow that normal process when they come into the trading field. And then also after you pay this one-time fee, you'll notice that your mentor will be very interactive for you for maybe about a week. Once that dopamine hit fades out and he got your money, he doesn't have to fucking talk to you anymore. His incentive to provide consistent content and value to you is gone. It's out the window. Do you get what I mean? I don't care if it's Daniel Savage, Lambo Raul, Q Banks, all of their quality and their valued content goes down after you pay them. Once you get the cookie cutter course, it's game over. You're not getting no support from these guys. You're not getting no real interaction. You're not getting no actual webinars and shit like that. Nothing. Because that incentive after that initial payment is done. Right? So in Capital Hungry, you get access to all these educational webinars, not a cookie cutter course. You get access to this news terminal, which is faster than the Twitter feed. This news terminal is $20,000 a year alone. That cost me like $2K a month, just for this news terminal. If any of you guys wanted to get this news terminal for your personal retail use without being able to distribute the information, it would be $100 a month. If you want to go through like fucking meta stocks. But as soon as you want to purchase a Reuters terminal or a Bloomberg terminal for distribution purposes, it's $20,000 a year just for that simple fucking difference. If you guys want to buy a Reuters news terminal for just basic news for yourself, you can do that for $100 a month. And that's the price of CH. I just brought it all together into one combined business. Right? So just the news signal, if you were to go to Metastock has this same news terminal here. But if you were to purchase this Zenith right here, it's $150 a month. This basic one, foreign exchange data, is $100 a month. You can't share this. If you get caught sharing this data, you'll go to fucking jail. Because you don't have the licensing rights. You're only paying for simply the news. Just simply this news terminal by itself, if you wanted it, is $99 a month. But if you want to go through Reuters, like how I have the actual Reuters terminal here, and if you want to do anything with the Reuters API and the Reuters data API, that's $20,000 a year. All right? Also, all of these TradingView alerts at 1736, at GJ, those key level alerts get sent to the private chat. Those are premium TradingView alerts too, that you don't have to really pay for. You could just tell me, Jeev, set an alert here for us. You know what I mean? So in the private chat, you get the Capital Hungry news terminal. You get access to all these price alerts, session open and close reminders, all these Zoom sessions we do every single night. Other members like Sankey, who was sharing his analysis for deeper pullbacks on GJ. Sankey was also sharing his bias for gold bears and stuff. You know what I mean? You have me sharing analysis, asking people if shit makes sense and they understand it. You have constant interaction and content being shared in the private chat. Every single week, you have a weekly recap, a news briefing, fundamental and mental reminders, your weekly economic report. You know what I mean? It's $100 a month. It's $3 a day. It's not $100 a day. It's not $100 a week. The amount of shit in Capital Hungry is actually a little bit ridiculous at this point. And as we keep it growing, the amount of resources in there only grow. Like I'm working on like a price monitor. I just had a bit of hiccups with it. But I'm working on bringing some more tools to Capital Hungry, like some price monitors. And the more webinars we do, the more Zoom sessions like this we do. Every single webinar, whether it's a simple trade idea 30-minute webinar like this could be a quick 30-minute trade ideas webinar across pairs, or it could be a 3-hour Zoom session like we're doing now. All of this. Oh yeah, it's 110. Sorry, my bad, 110. But all of this is continuously adding more resources in history to Capital Hungry and refining all of our skill sets. You know? Yeah. Yeah, I encourage people, if they have questions in the chat, to send me their notes, webinar notes, charts, because it makes it easier for me to answer questions then. I hate when people come to me with a basic ass open-ended question. It's like, bring something to the table, you know? Yeah. US and EU. Yeah. I don't think you're going to find, I personally am not, and this is no disrespect to anybody else's trading service, but I don't think you're going to find this much content around the financial markets fundamentally and technically anywhere else. I haven't personally seen it anywhere else. Especially like week after week, day after day, month after month, you know? The news feed isn't great. Oh, it is great. I thought you said it wasn't great. Are you saying it is great? This news terminal is great or bad? You confused me. Is this better? Oh, you're talking about like a free news source. If you guys want a free news source as well, just go to the Capital Hungry Twitter. This is just economic news as well for free. Even Forex Factory sources from here as well. But that's a good share as well. Teletrader.com/news. You know? Yeah. Gold has just been ranging, everybody. GJ was a great trade. GU was a solid trade. That's about it. All right, everybody. Now we're coming to pre-New York hours, 6 a.m. Eastern hourly candle close. I'm done for the night. I'm going to call it a night there. We were very patient waiting for those GJ and GU sells. It was a slow night to start, but we finally got that play we planned to play out. Just to quickly review and recap. At the start of the night, we identified that GJ had this double top rejection at this previous price sensitivity area to the left and was still respecting that corrective bearish market structure as we were just having. And remember I was telling you guys in the private chat, be cautious of this. Remember yesterday's London Zoom session, guys? Private chat, you guys remember where I said we can bounce around between 0.5 and 0.8, but if we don't break structure, we're gonna have this happen? Simple. All right, just let the consolidation do its thing. Exactly, Darren, exactly. We assume that this is, if this doesn't break structure, we assume it's seller order flow entering the market. All right, so now you can see that on GJ, we identified that we were having this bounce in support potentially being created in this zone, but it was not breaking market structure. And we were also getting this double top rejection on the 1 minute. Then at London Open, we started to break below these 1 minute lows that we were struggling to overnight. We finally started to execute sells below 0.200, but then on the new 4-hour candle exited those sells because we saw the potential for a deeper pullback. So we were looking at initial sells here, but I advised to exit those sells as we had the new 4-hour candle open up. The new 4-hour candle initially pushed down and we started to see a little minor order block forming. We were seeing potential for a deeper pullback, and if we broke above this candle body high point. Instead, the 4-hour candle created that upper wick, and after this bearish candle, I said, it's looking like sellers are still stronger. The 4-hour just created its upper wick. If we can clear these lows, then we'll have a much cleaner sell play. And then as that 4-hour candle could not remain above 0.200, and we had this quick snapback in price after failing to break above this candle body high point here. We didn't even test it here. We had these bearish candle closures. I said to get out. The following candle bearish to revisit these candle body lows. As soon as we cleared those lows, a nice initial play, even 10-15 pips to 150 and then 151. This was all adapted to more in real time for the execution of the trade here. We were still in that corrective sell bias due to the structure here. But GU, we were in a sell bias right from the start of the night, looking for sells below this gray zone we had marked out due to the fact that the US dollar was showing more individual strength with the dollar index. So GU, we were just looking for sells in this area. I wasn't seeing a potential deeper pullback or anything like that, just because the US dollar was showing us more strength than the Japanese yen at that time. You know? So just to review those trades, and also for that analysis, if you guys want more information, you can always re-watch this webinar itself. Gold, we were only looking for buys above 1740. All we did on gold is range overnight. Ping-ponging up and down, very hectic whipsaw movements that cause a lot of stress and headache. All right. Thank you guys for coming, providing, and like, you know what I mean, showing up, interacting with me, providing support. I'll see you guys on Thursday. I'm going to call it a night here. Private chat. I'll see you guys probably later in the evening. I'll send another update. These trade ideas, like I'm telling you guys on GU and stuff, just start extending the corrective structure now. Just play this corrective structure now on GJ. Just wait for pullbacks and then play that structure. Gold, the same. Gold didn't do anything overnight. So the same trade ideas still stand of safe buys above 1740.5 and only sells for me below 1721. I know that's some ways down, but I'm still in a bullish bias on gold. All right. Yeah, I'll see everybody later. Thank you. Good night. Take care. Hopefully you guys got to learn something. Catch some pips with GJ or GU. Get our chart hours up. We get to back test in real live markets. You know what I mean? So it's always fun. It's always fun. I appreciate you guys showing up too. I'll see you guys later. Private chat. I'll see you guys later.